That's great. Now, can I ask Nitin and the next panel to come up? And while we're waiting for them to come up, let's see how awake and excited all of you early adopters are. Come on up, guys. How long did it take to scale electricity? Just shout out if anyone knows. Any idea? 48. Yeah. How long did it take to scale to mass adoption mobile phones? Not bad, 25? And what about the computer? Yeah, 24. So I think as we reflect, many of us have actually been working with distributed ledger technology or blockchain for many years now, from 2011, 12 forward. 2015 or 16 seems to be seminal in the enterprise blockchain world. But in my own community of geek early adopters and looking at infrastructure, I think it was Paul Brody from EY that said to me, you know, Lawrence, you really need to put this into perspective. It takes about 30 years for this sort of FMI to make its way into a mass adoption. And in this case, I think it means we're probably still running two sets of rails, but they're better integrated. So maybe we can come back to that sometime at the end of the day. But without further ado, gentlemen, the floor is yours.
Thank you so much, Lawrence. Hi, guys. My name is Nitin, ex-IBM, ex-State Street. I recently founded a company called LedgerLink, and the objective of that is a Web 2.5 platform. Saw tons of issues in the capital market infrastructure, and the goal is to be able to ensure that financial industry has a platform that allows them to be able to consume digital assets in a meaningful way without disrupting the operational framework. So it's a Herculean task, but I'm, again, fortunate to work with Zoniqx, Sanjeev, and also Aurum Capital. So take some time to tell us about your amazing platforms and your amazing journey before we get into some really interesting conversation that I think Lawrence set us for.
Thank you, Nitin. It's always a pleasure to share a stage with you. So yeah, so we are a tech infrastructure company based out of Silicon Valley, and we've been into the real-world asset tokenization space since 2017. It took us really long to actually build this whole platform in terms of understanding the pain points of the issuers, be it probably an asset manager or a fund manager, to actually understand how do we put the ownership of a real-world asset on chain. And I'm happy to actually, kind of say that there's a lot happened. From the sales side, the adoption has increased, but on the buy side, I could see some traction as well. I would like to probably put some more focus on how we have done this with the actual validation of a use case which we built with Aurum Capitals, and this is something which is really unique to us. Why? Because this is the first time a private equity company is actually building a global green energy AI data center on blockchain. So there's a security element as well of a security token, and then the utility aspect as well. But yeah, I just wanted to kind of ask Venkat to talk more about it.
Yeah, thank you, and good afternoon all. So I'm a traditional fund manager where we invest in next generation data centers. So we were looking into the various aspects of data centers, which has become very complex because of the demand which require for AI, edge, and also the next generation applications like connected cars, metaverse, and all the things, which is data centers are really a power-centric and ESG first strategy, how we want to build smart, green, and secure data centers. So as a traditional fund manager, I was looking into what are the alternatives options where we can create a better enterprise value and better value for investors, where we can add more liquidity, more transparency, bringing more operational efficiencies, and other factors of the value chain creation. So I reached out to Zoniqx and asked him, how can you help us with a blockchain plus tokenization? And that's where our journey started with Zoniqx, who said that, no, yeah, we can do this. And we ran through with our few of investors. They're also pretty excited about this. So the importance part is how do you bring this transformative technology of blockchain plus tokenization, which create more value to the investors and to the asset, both from the transparency, operational efficiency, and also meeting all the regulations and compliances as we report our journey. So we as being a Silicon Valley company, we are building the next generation data centers in US, in Middle East, in Asia, and in Europe. So now we have different jurisdictions, different tax reforms, different compliances. Now how can you bring that more seamlessly transparent in all aspects of value creation? So that's where Zoniqx is helping us in the journey.
So let me geek out a little bit, right? I spend a lot of time in tech firms looking at hyperscalers around the world, and what's interesting about your use case that you're going after is that there's an exponential growth in data center space. And for many of you don't know, 1% of entire energy is consumed by data centers. There's a stat that came in Wall Street Journal that every single AI data center will consume as much power as Manhattan. So I think it's been exponential growth. We have now 700 data centers, expected to reach 1,200 by 2030. So they're astronomical numbers. So there's obviously a high growth area, right? At the same time, you are a private equity firm. And if you recall some of the work that I had done in 2017 in Northern Trust, we built the first private equity marketplace. So the fundamental tenets of tokenization, I'll get to you in a minute on this, is around trade trust ownership, that we are going after transactional efficiency and how do we make things cheaper, faster, better, at the same time generating more liquidity. These have been narratives that we've been going forward with. In your perspective, as you're building Aurum Equity Partners from a perspective of this new age of oil, as we discussed, data centers is huge, playing a massive role in our economy. How do you, first of all, see this field of tokenization? Because I think I personally am tired of narratives around tokenization of money market funds. I think we've had enough conversation on that element. How do you see this? Are you looking at this from tokenization of PE structures, which is LPGP, illiquid markets to liquid markets, or are you looking at this and saying, can I create a newer asset class because I have all this infrastructure which can be a tradable commodity like oil that was done, or carbon credits, for instance?
There are three factors which tokenization can create the maximum impact. The first one is, as you said, the data is a new oil, and across the globe, digital transformation, cloud adoption, and AI is going to generate a lot of data through various devices like IoT, IoE, connected cars, metaverse, and even the blockchain, DeFi. So now how do you bring the security as well as transparency and meeting the country's different kinds of legal systems like sovereign data laws and other compliances? So there is no way today we figured out that, because we have a lot of expertise in data centers through our background. So even the companies like Equinix or hyperscalers, it's very hard to do this. So what is an alternative way to do that? So basically, through a blockchain and tokenization, we can automate the whole process of getting this data or this information into a smart contract through an automation framework, so that now it actually improves our operational efficiency as well as cost and other things. That's one. The second part is, how do you manage? One of the leading KPIs for digital infrastructure is power utilization efficiency. How do you manage the power? The second part is, how do you manage water utilization efficiency and the carbon utilization efficiency? Because that gives you the ESG credits, what is required. And many countries across the globe, they are very, very ESG focused. So we wanted to address that in real time. And again, using blockchain and tokenization. And the third thing is compliances and regulations, how you report. A traditional PE firm generally does the valuation quarterly or yearly. So how can you bring that into a real time, through a smart contracts and other blockchain capabilities? So if you can able to bring these three things for next generation technology, right, I think we would be more building a better enterprise value and better transparency to our investors, apart from traditional things like liquidation and other things.
Yeah. So let me ask this question to a guy who spent almost a decade and who has a tokenization platform. Why tokenize it? Like, for example, customer, which you are of our, of Zoniqx, comes to you and say, hey, I want to do all these things. Of course, you want to tokenize stuff. But the question I'm asking is, you're not drinking the Kool-Aid, why tokenize it? What are the challenges that you see in the use case that he brought in? Because it's not straightforward financial instrument. You're going about this the wrong way for efficiency perspective. So what is your perspective? How do you solve that?
No, I think most of the things Venkat actually, on behalf of me, talked about it. So the efficiency, operational efficiency, the liquidity. But I wanted to kind of, probably this is something which is way back when, a year and a half back, we started talking about it with Venkat. And I see that this particular use case is a perfect use case for a tokenization and see, this could probably be a benchmark of, for a tokenization angle out here. Because what I see is, what Zoniqx has built is something which is global regulatory compliance. So now, just to give you an example of how that thing works in actual practicality, is Venkat is having this Aurum Capital fund which is based in Cayman, and Cayman is having a feeder fund in different regions. So if you use the those feeder funds in actually kind of have these tokens issued in these local jurisdictions, we have something called as Global Oracle Compliance, which actually takes care of the regulatory framework for security token issuance. So which is like, based on the jurisdiction of an asset class, it actually gives you the framework which is applicable in that particular jurisdiction. So if it is in the US, it is SEC, Reg D 506C, Reg D 506B, or Reg issuance, which actually is going to be, you can select the framework in between. If you are in Germany, it is BaFin. If it is in Dubai, it is Vera. So I think it's very easy for an issuer to actually just select the regulatory which is applicable in that particular jurisdiction. So that's one of the reasons that we really wanted to see this as a use case to get the validation done for an institution to then actually apply the same back in their own ecosystem.
Yeah. So one thing on this, right, which the narrative that in 2017 was, look, these are illiquid markets, we want to bring in liquidity, and the normal tendency of tokenization conversation is, look, we can fractionalize it, and ergo, you're going to get more liquidity. But it's far from the truth, because liquidity comes from the real business, the buy side, sell side. There has to be, you got to create a marketplace. Did this global Oracle compliance platform that you're talking about, and your ability to be able to still solicit investments from any part of the world, as long as you're adhering to that appropriate jurisdiction, did that help with liquidity at all? Like, did you actually find the subscription?
Yeah, this is a great question. So because ours is a global fund, and this is US based, but our investors are globally. So our master SPV we have structured at Cayman, and we have 3 feeder funds. One is in Delaware, which is for US investors, Luxembourg for UAE, for Europe, and then Abu Dhabi for DIFC. So based on that, we can actually have 3 different feeder funds. Yeah. So the investors in that region actually participate in that SPV, and that comes and connects to a master SPV in Cayman. So now this is very hard from meeting the compliances, taxation and justification, and all these compliances which needs to be met before we onboard the investors and continue to report or generating K1s or any kinds of tax stuff. So that part, I think Zoniqx has a better story to help us in meaningfully and timely manner addressed and in real time. So that's something which our investors really like that as part of the transitioning to blockchain/tokenization along with the traditional stuff. Otherwise, it's pretty straightforward whether you are in traditional way, you are in the cap table of the traditional one or versus the blockchain. But the other thing, the transparency, operational efficiency, reporting, compliances, this is something which we believe that the blockchain plus tokenization can bring.
Default.
So let me throw another curveball here. We discussed this at dinner last night. So yes, you have the PE side, operational efficiency, liquidity, compliance, and the ability for you to roll out these funds globally because you have a tokenized structure to do it, and you have a legal structure to adhere to. So for example, I gave an example of Southwest Airlines back in the day when oil prices were crazy. They had a hedge, which allowed them to have cost that's predictable. We had carbon credits, a newer instrument for ESG adherence, and many of the big tech who are running these massive data centers acquired carbon credits to be able to offset some of that, to be green, essentially. Until challenges came about, it's a brand new, asset class. is it conceivable that the compute credits, so essentially AI is oil, a whole lot of investment going into data centers. I think the numbers that I saw is close to about 550 billion in the next 4 years. So there's a massive amount of investment going into it. And at the same time, every financial institution, every research firm, every life sciences firm will have access to these hard to have credits. So is it conceivable that I can use your new infrastructure that you have, get those credits in tokenized form? That way I can have access to it, and because you're investing in data centers, use them as tradable credits and keep my cost low. Is that something that we can?
Yes. So,
and how do you financialize it?
let me break down your question into two parts. The one is the ESG part, which is kind of a utility part of the of the data center. Second thing is how do you build a better TCO model of all the assets inside the data center, like compute, storage, network, and other things. So and that can be, the first part is, as I told you, that we can have all these tools of IoT or IoE tools which can feed the live data into a smart contract for better reporting and other things. The second part is the compute as a service or network as a service. These are all the appliances which are part of the data center. So that's the next generation of business case or the use case which can be monetized, as long as we are able to capture in one form or other based on the utilization part, capacity management, and utilization part. So to answer your question, is the first phase is very easy to deploy, which is the utility part of the ESG. The second part is, I think it requires a little more time based on other things.
Yeah, Nitin, so if you think about, this particular project has got two elements to it. One is the security token offering, which is, to raise capital from a private equity perspective, and the utility part, which is actually to measure the GPU processing in terms of, the usage or the various hardware component of it as well. So and just going back on the, the previous question where, see, this is a different asset class altogether. We are actually trying to create something which has never been built yet, right? As a alternative investment product, and that actually seems to me as a phenomenally great, kind of a buy side. And yeah, just going to a buy side, which we already discussed, right? I mean, where exactly buy side is? I mean, you could issue as many as tokens on a sale side, but just creating a distribution rail, and connecting with one of the buy side is not going to resolve the problem. So what we built something called as a global liquidity distribution rails, which connects the entire buy side. And when we say buy side is the family offices, pension funds, the endowment funds, could probably be broker-dealer networks, IRAs, and everybody, whoever wants to invest or diversify their funds into digital assets, they could probably have this secure connect, which we call it as an internally name, which is secure connect, which is global liquidity distribution rails. And that's something which is actually quite fascinating for us to, kind of get into this space to actually get the private equity as a use case and within the data center space, which is highly in demand.
Got it. No, I think that's super interesting too, and I think we discussed this earlier too, that everything is sell-side driven today. Like, look, we have this, and until you actually have the buy side and build a marketplace that exchange the transactional avenues that we seek with DLT technologies, that's simply not there.
Right.
So we have 3 minutes, and with that, keep it succinct, and love to sort of, in a minute, what's your future vision state? You actually talked about being a fun guy, but you're actually a geek. You're a technical guy. You started out your career with Cisco, and you spent a lot of time in tech. So don't underplay that, because this whole industry is all about technology in general. How do you see the next year or 5 years, which is till 2030, all this amazing projection that the Wall Street Journal article talked about and research that many of the think tanks have done? Yeah. How do you see yourself fitting into it? One. Second part of the question is, you're also a PE firm. There are 8,000 of them of your size in the world. How do you see yourself sort of evolving?
Yeah, so I strongly believe in blockchain and tokenization on 3 fronts, whereas we can convert illiquid assets into liquid assets, where my investors don't need to wait for 10 years. Yeah. And number 2 is we are more transparent in how we are reporting the value of our asset and investments to our whole ecosystem. And the third part is how you can actually build the value through some automation, which we can bring in. So I think the private equity like ours, especially focused on data center asset class, it's no more a yield business. It's more into a better returns of IRR and other MOICs metrics which we chase for. Aurum also has a venture capital arm. We have we have invested in early startup companies as they grow. So actually, I'm excited to bring that also at a later point of time, so that even the VC world can also participate in this cutting edge technology.
Got it. No, that's good to hear.
Yeah.
And also your website for people who want to check you out.
Website?
Yeah.
It's www.aurum.pe. It's very simple.
Good.
Yeah.
Yeah, so we would like to remain the dominant player in this space because we've started in 2017. I spent almost 3.5 years to get my first paid client, and it's not a kind of joke to probably just be there consistently.
That's commendable.
Yeah, because the regulators also were actually kind of evolving this space. So with this, we definitely would like to offer this. I just want to say this end-to-end solutions, but I think we put the entire ecosystem with the custodians, with the leading blockchains, because we have interoperability play as well. And of course, with the custodians. And all of this together is actually a solution which we could offer it to the institutions with the biggest asset managers or the fund managers in the world.
So 3.5 years, I'm just starting out, man. I have to wait for another 3.5 years to actually get a paid client. So thank you for that encouragement. And of course, when you tokenize the stuff, you eventually will have to get into financial primitives, and they have to integrate banking. That's when hopefully I meet the requirement from that perspective. But I know Lawrence is giving me dirty looks. We're almost out of time, but thank you so much, gentlemen.
Thank you.
Thank you so much.
Great.